Hey, everybody. We're so excited to have Chris Prefontaine on the show. Chris, thanks so much for coming on the show.
Yeah, thanks for having me, guys. Pleasure.
All right, Chris, we'll dive right in. And we want to ask you, what does real estate on your terms look like? And how can people invest with no money down?
Yeah, so your terms simply, well, your terms and my terms means that it's no banks, no cash out of pocket. So it's going to be lease purchase, owner financing, or subject to the existing financing. So one of those three methods is how we buy. And I mean, even right down to our own office building. So we're in the trenches every day doing this. We're not just teaching it.
Awesome. So at a high level, can we break down what each of those things are? So you said the seller financing, subject to, and then I can't remember the other one, lease option?
Lease purchase. Yeah, or some people other than Texas will call it a sandwich lease. So let me hit, I'll hit each one. So the sandwich lease, why is it called the sandwich lease? And you can't do this in Texas. It's the only thing you can't do there. Sandwich lease just means I'm going to enter an agreement with a seller for a lease purchase with a definitive on or before close date. I'm going to then rent to own it. So it's another lease to my tenant buyer. Key distinction, buyer, not tenant. Buyers who need time, especially during COVID, but always, who need time to save, fix credit, whatever it might be. So we're in the middle. That's the sandwich. And we're collecting what we call 3 paydays. We have actually trademarked that. And that means when a tenant buyer comes in the house, we're going to get payday 1 with a non-refundable down payment. Now we know they're a buyer, not a tenant. Number 2 is going to be the spread between the monthly numbers. I got a mortgage to pay that's in the seller's name, or a lease payment to the seller, and I'm collecting something from the buyer, payday 2. And payday 3 is the cash out at the end, but the cash out at the end is pretty cool because it's the markup in the home, but also all of the principal pay down that was incurred during that time period we're paying the underlying debt. Those average paydays, before I move to the next one, because it's the same on all of them, is about 75 grand for us as a family company, but our students around North America range from like a low of 45 grand to a high of $250,000, depending on the price range. So they're lucrative deals. Owner financing to us, because it means a lot of different things to people. Owner financing to us is we will speak with owners who are free and clear. So they owe nothing. They owe nothing on the property. And so we are usually paying their price, sometimes even a premium, depending on how long they can go on the term, because we only pay principal-only payments monthly. We don't pay interest. Now, this caveats to all these, right? But by and large, 95% of the time, we are paying principal-only payments to the seller. So think about that from a hedge against any market. You are hammering down principal from day one. So that's the second way we buy, owner financing. And then the third is when I said subject to existing financing, a little more complicated. So not the path for, say, a brand new investor. The other two are. The subject to is, Kevin said you have a home, and this is a situation where usually you're stressed out. The other two, not necessarily. And you need relief tomorrow, and this has to happen now. So we buy your home, but your loan stays in your name. I take the title, but your loan stays in your name until such time I get it cashed out with my buyer. So not as much the opening conversation, but those deals are very lucrative as well. They all are. And sometimes it's nice to go from a sandwich lease, the warm and fuzzies with the seller for a year or so, and then transfer it to a subject to, just to give you kind of a fourth little caveat. So I chucked a lot out there. I don't know if you want to go back to any one of those.
Yeah.
A lot of good information.
Exactly. I do have a few questions around what you mentioned there. Maybe we'll start with the first one, that sandwich lease.
Sure.
If I'm a new investor, and that sounds pretty complicated to me, what would I do to sort of get myself over that fear and sort of learn how to do this and maybe get comfortable with it?
Well, the biased answers, of course, we can teach you, right? But there's a lot of free information online. Our YouTube channel in particular, Adam, we have, I don't know the numbers now, it's well over 100, where we whiteboard the deal. We literally show the good, the bad, the challenges, the wins, the paydays, and we break it down how that works for the sandwich lease. So that's a good place to camp out. Then you'll know, okay, I get it, or at least I understand the concept and I want to learn more, fine, but it's all free. That's the beauty of the internet now. And the lease purchase for a new investor, to the beginning of your question, it is the easiest, believe it or not, because it's a $10 deposit built into the agreement. You're not taking title. So there's I'll never say no risk, but there's very little risk. because of those conditions.
So you almost like you're controlling everything but owning nothing.
On the sandwich, absolutely. Control is the right word. Yeah.
So for the owner financing one, seller financing, owner financing, you're talking about only paying the principal. Is that the idea there, so that they can name whatever price they want? Let's say it's 30 years and they want $1 million. You kind of find whatever number that fits, so that you can then rent it out to increase your cash flow. Is that the idea?
Yeah, you brought up a good point that I didn't hit. So thank you. So the owner financing, we don't necessarily take the term, let's say it's 10 years, and then divide the price. What we say more times than not is, then I'll give you some caveats, is, all right, Kevin, you want 300. I'm going to give you 3 offers, hypothetically. I'm going to give you a 300 that has, say, a 5-year term with monthly payments of 300 grand, maybe 1,400 bucks, let's say. So at the end of that 5 years, there's going to be a balloon payment due, and we cash out that way. Now, my second offer to you might be, I can go 72 or 84 months, but I can pay 310. I can pay over what you're asking. Why? Because at 1,400 a month, if I'm going to make up that principal in several months, depending on what the payment is. So that's how we do it. Now, our office building I mentioned, we did do a 20-year deal on that. So some of these deals are a little different, but most of them are the ones I just explained, like 5, 7, 10 years.
Nice. Okay, that makes a lot of sense. And for subject to, I like the idea there that it's, when you talk about those motivated people, that's pretty relevant to COVID right now.
Big
right?
time, sadly, yeah.
Yeah, unfortunately, but it's like, oh man, I lost my job. I can't afford this mortgage. The advantage as the investor is you kind of come in without really paying a down payment type of thing. And then the win for the borrower is, wow, my mortgage gets paid for. I don't have to worry about getting foreclosed on or anything like that. Is that the idea?
100%. So you brought up a big point. We do our event, and someone was into the data there, and they said that out of all those loans that got put on hold 3-4 months forbearance, there was a large number. I think it's 60% that aren't able to pay those back. That's a huge number.
Huge.
So whatever the number is, it's big. And unfortunately for some of those sellers, to your point, a foreclosure would stink because now their credit's beat up for a lot of years, not just a year or two, because it takes time. And secondly, a lot of them have equity built up. So there are some instances where, we're going to make it a pleasant experience because we're going to stop paying a current. So now not only do they not get foreclosed, they're going to have a credit history that all of a sudden repairs itself over 6, 8, 10, 12 months. So that's a super positive for them. And in some cases, they can even get some equity back out of it at some future date or over time with us. If there's some ungodly amount of equity, we're going to save some of it for them. Right. And then to your down payment question, Kevin, the only down payment, there's no down payment, but when you're buying sub 2 when someone's in trouble, you typically have to pay the closing costs, the transfer tax and whatnot. Unless they have the wherewithal to do that. Some have, but most of the time they don't have it. That's why they're in the predicament.
Okay. So I feel like we could dive into the weeds on this for a very long time, but we've got other things we want to talk to you about. So I'm going to shift gears a little bit, Chris, and ask you about your book. So when you authored your book, The New Rules of Real Estate Investing, what did you learn from the experts?
A couple of things. So what's cool is I'm kind of an open book with letting other niches get exposed. Like people say, well, you talk about like essentially your competition. So I said, not really. Because what you learn from the different experts is, let's say you could take almost anything. Let's say tax liens. Ted, he's got a chapter in there. Well, if you take that chapter and you know about tax liens, doesn't mean you have to deviate and go to the shiny object and go do that niche. But you will learn the inner workings of it enough to say, oh, when I run into a tax lien on a property I'm looking to invest in, I'm not going to panic. I know what to do. I know what it is. I know the language. That's more why we did the different experts in the book. Aside from us commenting on it, my son and son-in-law and I, and aside from the mind piece that we put in there, that's why we put the different niches in there.
Nice. Yeah, that's a really cool concept. The book of, have these 24 leading experts reveal their secrets. Kevin and I did an ebook that's a pretty lightweight version of what you did. And we had a lot of experts come and just answer 5 questions about investing. And it was a kind of a similar concept that,
Yeah, good info.
yeah, it was cool.
Yeah, it's really embodiment of the abundance mentality, right? And at that same
Exactly.
time, it's you and Adam and I will give some type of a message that will resonate with a certain amount of people, a certain type of person. Chris, your avatar that you're targeting or that your message resonates with them is going to vary also. So to your point, it's like, I don't believe that, oh, you let your competition is the way you should look at it. It's who can you
Right.
learn from, right? You talk about
Yeah.
tax liens. I'm learning more about owner financing where you're doing just principal. I never thought about that, but you learn from experts in that capacity.
Yeah, and I'm not so naive to think, okay, we're the only niche, right? I
Mm-hmm.
mean, it's thriving during COVID. Yes, it was built that way, but still, it's not palatable for everyone. I understand that.
So when we talk about when you talk about smart real estate, what do you mean by that? Can you tell us a little bit more about that?
Well, did you say smart? It went out a little bit there. Is that what you
Yeah,
said?
smart real estate.
Yeah, a bunch of things, but it's the structure of the deal. So it's designing the deal. It's being able to walk away from the deal, not being sucked in because you want another deal. When I look at students all around North America, if they do it smart, they don't get themselves in trouble. The ones that get themselves in trouble don't do it smart, and they are too anxious or they're in need of cash, and it comes out in many different ways. And so that's what it means. All the inner workings to design the deal properly.
Yeah, that's great. I think getting in a hurry, especially for new investors, honestly, does apply to all, but especially for people who are super hungry and want to get their first deal or want to get their first couple of deals. It's so tempting to want to just jump in a little too fast and potentially do a deal that you shouldn't be because the numbers tell you it's not a good deal and your emotions take over. So I really like what you said there about that.
Also, Adam, in addition to the numbers, it made me think when you just said that, sometimes the numbers are great and that's what sucks them in, but all the rest of it, like the seller or the buyer, if they're a headache from day one or they're not moral or ethical from day one, that's not going to change. So that all pieces have to be looked at.
Such a good point. If you have a gut feel about someone or the deal, I say listen to it. I mean, that has really saved me more than once. When you have a bad feeling about something, continue to do the due diligence there, really chase that down. And like you said, I mean, if you have someone that is the way you described, it's probably best to just find another deal. And they're out there. It's not like that's the only one you'll ever see.
Plenty of deals. With our community now is hitting like 25 to 30 a month, and could that be uptick? Sure, but there's plenty of deals out there.
Yeah, very much so. And I do think it comes with practice of knowing what to look for and just a lot of at bats with those things. When we talk about mistakes investors make, you mentioned a couple of them, kind of diving right in when you feel like you don't necessarily have to. What would you say are other mistakes that you find investors are making more often than not?
This might be more higher macro level, and if we can go micro if you want, but I can see right across the board because I know just by the calls we do, strategy calls, that people are getting the shiny object syndrome all the time in real estate. That's why I mentioned earlier. Real estate's not like any other business, meaning time-wise, it's important to stay with it. I tell people this, so I'll say it this way. I tell people there's a few steps in the process to be successful in any niche, not ours. But the third step is stay with it for 36 months with blinders on. Like you can't deviate. It's a business. It's like me going to you guys as investors and say, hey, I got this business idea. And you guys go, okay, good. Yeah, we get the money. Yeah, okay, we like the concept. And then at the end of the meeting, I say, I'm going to give it a shot for like 6 months. I'll let you know how it goes. You wouldn't give me a dime. But yet that's what people do in real estate. I'll try it. I'll give it a shot. What do you mean? It'll work great if you just stay with it for 36 months.
I love that. I don't think I've heard another person give that advice or describe that. And I wish I had someone like you tell me that when I first got started. I'll tell you why I think that is for many people, because not having done it before, they don't know what to expect. And you're really leaping, you're going out and taking a leap of faith and just hoping that all of the things you've read were the right things and the people you've talked to were giving you right advice. There's so many crooks out there and people you're not sure if you should trust and you don't know
Great.
anyone, right? It's like, who do I trust? How long do I stick with this? I'm not sure if I'm even doing the right thing. But I think that's the importance of getting a coach. I know when when I got a coach, it really helped me a lot for that reason. But I think that's why a lot of people struggle with that.
Yeah, so I should have gave steps 1 and 2 to your point because you nailed it. So that was step 3, stay with it for 36 months. Step 1 is find a niche that you get excited about and get behind, right? And the second is what you said, and that is find someone who's doing it now, not a has-been. There's a lot of them out there, or a good marketer. Find someone that's doing it. Like if you're, I'll even go this so bold. If you just came out of COVID, or you're in COVID, depending on what state you're in, it's bad, and you're talking to someone who hasn't weathered any market storms or any curveballs, you're asking for the trouble there, because you got to have some weathering the storm to know to direct someone.
Yeah, I totally agree. I think it's just great advice that you're giving right now. And Chris, you mentioned strategy calls earlier. You do strategy calls with students. And what types of investing strategies do you like in this current environment with COVID and all this uncertainty? I think many intelligent people believe a downturn is coming.
Yeah.
What do you think?
So the terms niche, the three ways we buy that I said to you, that was designed and built after the '08 crash, because I got annihilated in the '08 crash. So then I built it to say, I didn't know about COVID, but I built it to say, okay, let's build it as recession resistant as we can. You can't say proof because nothing is recession proof, but let's build it to really be able to do what I said earlier, weather the storms. And then when COVID hit, it just went through the roof. So, okay, we were tested in it and it went very, very well. So when you're not certain, it works in every market. So right now, when you're not certain, what do you want to do? Do the strategy I said, but get longer terms. Do I really care what the market does when I have 20 years in my office building? Do I really care what the market does if I have a 10-year owner financing that I'm getting $2,500 a month on principal pay down? No, I don't stay up at night worrying about it. But if I'm paying top dollar and I'm doing buy and hold, or I'm taking out loans and signing personally, or I'm doing short terms, those are all a pretty tough recipe during a tough market.
Yeah, that buy and hold strategy is 100%. And that applies to even stocks. I mean, we're not well versed in investing in stocks, but if you're buying and trying to sell, time the markets, buy low, sell high, you're in for a world of trouble. You have to figure out a way to weather the storm as best you can. And I like the strategies that you were mentioning. Speaking of the stock market, what would you tell someone that's been putting money into their 401k their entire career, but they're on that fence about, maybe I should start looking at real estate?
Okay, this one could be a long one, but I'll encapsulate it. Here's my strong opinion on that. First of all, you can do self-directed 401ks. I have it, and IRAs, I have it, and do real estate deals that way. Ridiculously lucrative. Secondly, why do I say that over real estate? Or maybe you come up with a nice balance so you can sleep with that night. This is simple. Your stock can go to zero. And I know I'm going to step on some toes of passive investment, but your stock can go to zero. It's not impossible. Your house, if the market took a 50% hit, cannot go to zero. It can't. Unless it burned down, you didn't have insurance, but it can't go to zero. So it's safe. Third, if I take $10 in the stock market, let's say 10,000, and I put in the stock market, I'm buying $10,000 worth of stock. When we buy on terms, I can buy a house for $10. I can buy a house for $500. That's called leverage. And you cannot beat that when you're comparing apples to apples. So again, I'm not trying to step on anyone's toes, but that's just my personal opinion. When you guys ask me stuff, I'm only going to say what we do, right? My opinion.
That's great. With the self-directed and with the qualified plans to invest that money. A lot of people don't realize they can take money that they've been contributing to an IRA or a 401k, roll it into a type of plan that they can direct the money to and invest in real estate. It's just a fantastic tool. And the people who discover that quickly see just how amazing that can be.
I can give you an example, Adam, too. I like the live example. So we already cashed out of this, so I'll use it, but it was a 6-unit because you can do a strategy on anything. You can do it on planes and boats if you want, but you can do it on any property. we bought a 6-unit. It was owner financing because the guy's dad passed away. He didn't owe anything on it. He said, yeah, I'll take it over time. So I think we did like a 4-year deal, maybe a 3, and improved the property a little bit, got the rents up because of the principal pay down. I think in his case, it was like a couple grand a month. Because of the principal pay down and then the markup when we improved it, we put $500 down through the IRA self-directed entity it owns. And the HUD, the cash out net was like 116 grand. Well, I was pretty tough to do that in the stock market.
Yeah.
So that's a real deal that was just closed.
Yeah. That's a fantastic example.
All right. So when somebody's has a 9-to-5, right? Kind of piggybacking off of that, you talked about self-directed, but let's say that they wanted to be more of an active investor. Mm-hmm. What would you say the first couple steps they should take to point them in the right direction?
Probably steps 1 and 2 of that formula I said, because I'm just picturing, okay, I got a job. And during COVID, we had a lot of this going on in our community. We've actually moved 10 of our students into full-time. I know COVID drove some of it, but that was their ultimate goal. So I would say, all right, I got a job. Let's go find, there's a lot of free information. So go on YouTube, go wherever you got to go and find out what niche you actually like. There's all kinds of niches and sub-niches. And then find that person that can help show the way. Then it just becomes, okay, I got that. Now that person, whoever it is, should be able to say to you with certainty, hey, Kevin, what's your goal? Good. What time do you have? Are those in sync? Like, to be facetious, I want to make $1 million, but I got 3 hours a week. No, they're not in sync. So make sure they're in sync. And then that person should also be able to say to you, predictably, do ABC. Like, okay, I got your time, I got your goal, now do this. And then set up some accountability behind it, and you have a formula that wins.
What would you say to somebody who says, I don't have enough money saved to get started in real estate, but I would like to invest in real estate one day?
Okay, so back to the beginning of that Sandwich Lease chat we had, $10 and a little knowledge is what they're going to need to get their first deal. So stay with your job. Most of these people, I said that the 10 of them that went full time, one guy had a job for 17 years. He's been with us for about a year. Another gentleman he's only in his 30s, so he had his job since he was working, and he had a 2-year plan. So it's not like you got to leave your job tomorrow, but certainly design something that says it might take me a year or 2 or whatever your palette is for. I need X amount in the bank, right? Everybody's a little different with that. Or because of COVID, check with your administrator on your 401k or IRA. You have until the end of 2020 to take out up to 100, I think it is. I'm not an accountant, but just on the surface, and have some reprieve with the payback. So there's options out there right now more than ever.
I like that. And you have to get informed, right? If you don't have a lot of money, maybe you have a lot of time, or if you have any type of time, figuring out the right step to take with the right information is probably the most important thing you could do anyway, instead of just blindly going somewhere and saying, all right, I'm going to do this. So getting informed. Speaking of learning things, what would you say were the biggest lessons you learned from the 2008 recession, which we'll probably talk about COVID, but we want to hear kind of from that crash perspective, what happened there. You said you lost a lot, but what did you learn?
Okay, so the short answer is everything we built is what I learned. So what was it? It was the biggest thing was don't sign personally with a bank. Just don't. I had a strategy call today with a woman who said, yeah, I'm going to buy these things. I'm going to get them financed, and then I'm going to rent own them to the buyers. So you're signing personally on every house. So when the market changes or when the bank changes their mind, you get a call on your loan. That's your personal credit and your personal assets. So number 1 was don't sign personally. There's no exceptions to that in my book except for your own personal residence. That'd be the only thing I'd say, okay, I get it. That's legit. But even then, you could probably buy it owner financing. Second is no reason to put up gobs of cash. So someone says, I got all this money, I want to invest. I say, oh, fine. Learn the terms deals still, because you might be able to utilize some of your cash to get a better deal, but you don't need cash to do terms deals. So those are the 2 big lessons we learned there. And third is there was only 2 times in my entire adult career, and I've been at this 30 years, that I did not have a mentor. And I didn't realize this till like 2 years ago when I figured this out. And the 2 times were 2008. I got, you get cocky and go, I got it. I don't need anyone. And then so when the hit the fan, I had no one to call and go, hey, what would you do here? Like, what's going to happen? What's my path? And then the other time was in the about not quite mid 1993, 4-ish. Same thing. It was the only 2 times ever that I got stung with markets, and they were because I didn't have a mentor. Crazy.
Yeah. So let's ask you about the mentor. I even mentioned earlier that I got a coach and that really helped me. And you just talked about having a mentor. Can you just talk a little bit about the importance of a mentor, especially as a new investor, or maybe also as a seasoned investor?
Yeah, both. I agree. Well, okay. So there's a big difference between kind of a hands-on coach and a consultant, or a mentor could fit either direction, I guess. We're more hands-on. I think it's necessary. It doesn't matter what niche you pick. I think you need someone who's hands-on. Hands-on meaning what? We're in the trenches. Like when we coach, if Kevin is one of our associates, we call it, and he calls me, I'm getting on the phone with a seller like now. So we're in the trenches doing it. It's not just consulting. We used to do that, and it didn't fit our mission of doing deals. We have a set amount of deals we want to do with students. So just be careful with if it's going to be a consulting role, or hey, I'm ready to roll up my sleeves with you and get these deals done. That's all. And then just make sure, again, they're still doing what it is you want to do. There's so many people that are phenomenal marketers, but some of them haven't done a deal, which slays me.
Yeah, that is surprising and a little disturbing. Yeah. But I think it's super cool that you actually would do the deal, or get on the phone and do it right alongside them. I know that works really well for people like me because I learn very well by doing, but when I have someone right along my side, it boosts my confidence, and then I sort of learn better that way because I'm not so afraid that I'll make a fatal mistake. I don't mind making mistakes, but I don't want to kill myself doing it. Right. So
yeah, I agree.
That's super cool. You do that.
Well, we talked about the 2008 crash, and you mentioned that, COVID has really hit the economy, and a lot of experts, people smarter than Adam and I, are talking about something big is coming. So what have you learned so far from the workings of COVID? And you mentioned earlier, you can't make anything recession proof, but you can do your best to make things recession resistant. Tell us about what you've learned so far.
Well, so the banks are, as I said earlier, tightening, right? We know that everybody goes, well, there's low interest rates. Yeah, if you qualify, the bar to qualify has been pushed up so high. So people are flocking to the terms type of environment. In the early 90s, it was like 2 or 3% of the transactions were done outside of banks on owner financing lease purchase, for example. And I don't know the exact percentage post-COVID or where we are now with COVID, but certainly it's up in the teens and probably approaching the 20% mark as far as all transactions in the United States that are being done creatively. And so I just think you're going to see a major, major rise in that. So the lesson when this hit was that, number one, it tested our model, and the model didn't just make it, it's thriving. And so that was nice to see. And two, just got to push longer term. That's the biggest lesson. So coincidentally, about a year and a half before COVID, we started pushing longer terms with our students. And it's amazing what the mindset does. It's like the 4-minute mile. We started talking about longer terms, and they kept asking. Now they're getting 7 and 10 instead of 3 to 4. It's all mindset. So those are big lessons there. And the other thing you said, the experts are saying this and that. Nobody knows, as you know.
Right.
The billionaires don't know. The economists don't know. I had Jarek Robbins coach me personally, Tony Robbins' son, January through June this year. And he said to me, Ray and my dad, he's talking about Ray Dalio like it's nobody. Ray and my dad was sitting around, and they were saying that nobody knows. Of course they don't know. So what I do know is when the media is screaming that, what the lesson I learned is people stop. So it's not even fight or flight, they freeze. It's the worst thing to do in this. Run wherever everybody else isn't running. That's for sure.
That's fantastic advice. I like it. You mentioned the getting the coaching or mentorship, or whatever you said there. What are some other resources that you really like? As Kevin and I, we love to learn, use books, use podcasts, use, seminars. What are some resources that you really like right now?
Generally speaking, and out there in the market, this might surprise the listeners, but after you know your niche, the piece you should spend time on is the mental game. Because I can teach, and we do, teach the same foundational course to everybody. So then why, if we do that, do people come out of the gate and do a deal in 42 days And why do some people do a deal in 1 year? What gives? There's the same material. It's all here. So here's what I tell my students: your income cannot outgrow you. So you might get lucky and do a deal, then you might go past where you've ever been, and mentally it's going to bring you right back down. Ed Milet from Max Out Podcast, he was on our show and he was our keynote recently. He calls it a thermostat. He said your internal thermostat is what it is until you grow it. But the problem is if you don't, it's going to always drag you right back down to that temperature. So it's the mental piece as far as resources. So go to podcasts like his. It's an amazing one. You guys have your show. Get on those. They're free. And start working on the mindset piece of this game. It's a big, big deal.
That's great.
Absolutely agree with that, especially when it comes to that mindset, because when you figure out where you want to go, what you want to do, it makes it a lot easier. And I love that you said find a niche that you enjoy. Because if you don't really like your job and you think that I'm just going to make money and I'll be happier, you're going to work hard and you're going to be just as miserable. So there's something to improve there personally.
Yep, short-lived. I agree.
So we wouldn't be the tech guys who invest if we didn't ask you a tech question. We're doing a lot of looking back, right? Talk about 2008 and who inspired you and stuff like that. But what would you say was your favorite piece of tech as a teenager?
Teenager, man, now you're going to date it. Well, since computers were new, that would be a big deal. Right on. Desktop.
Any particular model stand out?
Well, I don't even know what was the is it Digital Corp? They're out of business, but that was not one of the original desktops.
Yeah, and then a lot of people say like the Commodore, Commodore 64.
Okay, I do remember that now you say it. Yeah,
I had a PC Junior. I'm kind of telling my age.
PC Junior.
Yeah, it was an IBM. It was
so IBM, Digital, and then there was one other one that was out. There's a ton of knockouts, but yeah, I remember the days. I've never been asked that one. That's
pretty cool. Yeah. So we have another kind of a bonus question we'd love to ask you. Is there a role model that has inspired you?
The answer would be yes, but it changes like either yearly or half yearly, meaning I think this is for anyone, whether they're conscious of it or not. Like we grow, right? If we're pushing and growing, so then it changes who that role model might be. So every year might be someone different for me. Right now, it's a whole group out of Arizona called the Elite Entrepreneurs because they specialize in growing businesses from 7 to 8 figures. You talked about teenage years, well before politics were involved. So that has nothing to do with politics. Trump's first book I read, I think it was in the 80s. That was cool because that changed the mindset of what's out there. I remember that specifically.
Yeah, that's neat.
Well, Chris, we want to know where people can find you, and that way, if they're listening to this and they love what your content, things that you've talked about, which we've really enjoyed this conversation, where can they find you?
I'll actually when I said strategy call earlier, my team's going to love me for this, but I can actually, the site is smartrealestatecoach.com, but if they go to smartrealestatecoach.com/action, they'll actually get myself or my son-in-law or Brian live on a call for 15 minutes. And I promise you, whoever you speak with will give you some actionable item for a nugget to take away. And if they don't mind, listen to me babble for another 35 minutes or so. There's a free webinar right on my site. They can go through that and get a little more in depth and see numbers versus just hearing voices talk about numbers.
Awesome. Thanks so much for that. Yeah, it's really great.
Well, thank you so much for your time, Chris. We had an amazing pleasure chatting with you, talking about ways that people can get started in real estate with really no money into it, but ultimately getting informed first. So thank you so much for all those valuable nuggets you shared.
Yeah, you're welcome. You guys are doing a good thing.
Thanks a lot, Chris.